You're listening to Rate Ready Radio, brought to you by Mortgage Financial Group, NMLS number 219650.
Well, hello everybody, and welcome to Rate Ready Radio. We have been on a hiatus for way too long, but we are back. We are back to give you information in the real estate market in regards to mortgages and rates and all the things that you need to know if you want to purchase or refinance a home. Today I'm joined again by Rich LeMoyne. Hi, Rich. How are you?
Doing great. How are you?
Fantastic. Can't complain. Good. So we want to talk to you a little bit today about what's happening with interest rates. That has been the hot topic button. Are they coming down? When are they going to see 4%? When are we going to be in this market? And so we want to talk a little bit about that and what's happening in the economy. And so many things that are affecting the rates out there. So what are you seeing right now? What are people asking you about on interest rates?
Are they coming down? Are they coming down? How far are they down? Are they in the fives or in the fours? Are they going to get down to 3 and 2% again? So those are the common questions. Obviously, we're not getting to 2, 3, or 4. In certain situations, you can buy into the fives.
Yep.
We're definitely in the low sixes, I would say, as a whole.
Fair question. That's fair.
And certain situations you can definitely get into the fives. So, we're at least a point to a point and a quarter better than we were last year at this time.
I agree with that.
So
totally agree with that.
Positive movement.
So I still get all the questions about the Fed and the interest rates. Oh, I heard the Fed lowered the rate. I heard the mortgage rates went down. And we keep asking that same question. Fed rates are not mortgage rates. Mortgage rates run on their own. Yes, the Fed does indirectly affect the rates, but it is not direct. And so please keep in mind, just because you heard the Fed lowered the rates does not mean the mortgage rates got any better. Matter of fact, we haven't really been moved out of a mortgage range in rate-wise for about the last 3 or 4 months.
Correct.
We've been sitting in the exact same spot. So, even numbers today, CPI came out today and for the inflation data, and it's getting a little closer to the 2% they want. It's, I think it came 2.6 is where it wound up in at. And so those numbers are getting a little better, and they're getting closer and closer. But it still did not bring the rates down. We did not have a fantastic day in mortgage rates this morning. We looked at a small drop slightly on the 10-year treasuries, and then it went right back up again. Yeah. So with all the uncertainty, and that's, I think, what we'll cover next, I think that's what's causing part of the market. And, we've got a lot of things that are out there. Just the latest with President Trump, I guess the DOJ is going to be investigating Chairman Powell.
Yeah.
Wherever you stand on this politically, it doesn't really matter. We just know it affects the economy, and it affects everything that we're doing in the mortgage world, and that's all we really care about. So what else are you hearing out there that's been affecting the mortgage rates and what's going on?
Well, you have that affecting it. Obviously, there's turmoil within what is Trump doing next. Mm-hmm. He's obviously started to focus in on the economy, so that's good for us. He's talking about a $200 billion bond buy down and how that's going to affect. I don't know how it's going to affect. Yeah. Hopefully in a positive way, but we don't know. So there's a lot of uncertainty, but I think what we take out of all of it is rates are down a little bit. Land values and appraised values are holding steady.
Yep, definitely been seeing that.
So we're still there. We're still in a market to where buyers can request and put on their contract closing concessions. Yeah. And that's, I've been seeing that is a must.
Yeah, I think my last 3 contracts came in with $10,000 concessions each.
Yeah, everyone.
Realtors, just ask. They'll pay it. Don't even be afraid of it. Just ask.
No, that's the market we're in there. Yeah. I mean, the majority of them are 10,000, 7,500, 10,000. Yeah, just as the norm anymore. For sure. Obviously, when values go up, probably lose a little bit of that. Yeah. But for right now, get it while we can get it and help buy those clients' rates into the fives. Yeah, and they don't have to refinance at that point, possibly.
Yeah, we've been a lot of our clients I know have been being talked to by the servicers. The servicers are the people that they make their payments to. We are a lender, but we do sell the mortgages just like most companies do. And the servicers have been contacting, hey, you want to refinance, and that's been a game. That's been a game in thinking of whether it's the right time to refinance or not. If you got a 7 in front of your interest rate, it might be the right time to refinance. This might be a time to jump in on there. The rates are down, government loans, conventional loans. Certainly their interest rates are down, but the problem is the cost of it. Mm-hmm. And where are they going to go? That's the magic 8-ball question. Will the rates come down low enough where it doesn't cost you to take that 5 7/8 rate or the 6% rate? So a lot of times I've been talking to clients, I've been talking to them about short-term gain versus long-term gain. Right?
Yeah.
So you refinance now and you pay, and refinances are not free, folks. They're not free. So, you pay somewhere in the neighborhood of 2 to maybe 3% in costs, and that gets rolled into your mortgage. You don't have to pay it out of pocket necessarily, but it will get rolled in the mortgage. And you sit back and you're at 7.25%, and you take that down to maybe 6.5 or 6 3/8. But that's great. How much did it cost you to do that? And then you have to do it again.
Mm-hmm.
So sometimes you have to really look at it, and a dollar amount, I think a loan amount really matters on whether there's a benefit for the payment.
Correct.
Right. And so that's some of the stuff that we've been battling. I'm sure your clients have been calling you.
Well, I mean, we looked at one this morning. If we get them from the rate to where we project them to be, it's a $235 a month savings.
Right.
But you also have to factor in, what is the break even? How long is it going to take of that $235 to get them back to even on that?
Correct.
How long are they going to be in the house? Is this a 3-year house that we're going to be in? Or is this a 5-year house? 10-year, lifetime? Like that all factors into what you're going to do, and for each individual person. So I think the answer is contact us. Let's see what the rates are. Correct. Let's see what the benefit is for you, and then let's also have an idea of what your plan is, so you have all the information and you can make the decision of, well, now's the time to refinance, or wait, see where this thing goes in 6-8 months to see.
Yeah, I totally agree with that. It's all about a plan. It's all about trying to understand what your future is looking like and what you want this to be. Are you in a short-term house? Are you in a long-term home? What are you trying to do for your financial goals, say 3, 5, 7, and 10 years down the road? We've always said that if you can't break even on closing costs, and what I mean by that is however much it costs you to do the refinance versus your savings monthly, if you can't recoup that money in a 3-year period, 36-month period, it's probably not worth doing. Probably. There are going to be some opportunities that, yes, it still should be. Now, the other side of that is, hey, if you're going to do a cash out refinance, or you're going to finally pay off all that credit card debt, and yes, I know President Trump wants to make it a 10% fixed rate for a year on all the credit card debt. I don't know if that's going to happen or not, but the reality of it is that you can roll off of that debt that's sitting at 23 and 25% on credit cards, and you can roll that all into one payment. You certainly will be in a better position.
Oh, without doubt. When depending on your individual situation, if life's hit you a little hard, or you made a couple decisions that you are paying for right now, it may be the right time to do a cash out if the equity is in there, depending on how long you've been in the house. There's a lot of factors that go into it. It's not just payment. Yeah. So, that's why I say let's make a plan and figure out exactly what's going to work best for you.
Yeah, and so that's important, folks. So when you have those questions, that's what we're here to answer. That's what we're here to try to guide you through, to give you options and opportunity. And that's what we're looking at, and the best thing we can do for you. Always give you the options, because ultimately your budget better than anybody. Your finances better than anybody. We see you on a piece of paper. Now, some of us, we know you because you've been our clients for years, and we love you, and we thank you for the continued support. But the reality of it comes in, a lot of times we don't exactly know your situation. And so we want to help by getting as much information as we can in order to determine, hey, here's your option A or option B or option C. And maybe it's, yes, you're saving a bunch of money on the mortgage. Or maybe it's, hey, you know what, your mortgage payment is going to be exactly the same, but we're going to wipe out this other $3,000 a month in debt that you're paying on credit cards. Yeah. That's going to take you 33 years to pay off. So those are the things that we do. That's what we're about on the refinance side. So you may be in a position right now to refinance. It might be the right time to refinance. The rates might be low enough for you to refinance, but you need to talk to a professional, talk to Rich, talk to myself. Let's make sure that we're doing the right thing for you and not putting you in a position where you may have to do something again that just costs you more money.
Right.
So that's one of the most important stuff. So, things are changing definitely in the mortgage industry. Nice to see it starting to flatten in the values. You mentioned that, and I think you're right. I think with everything that we're hearing about people moving still, right? New York, California, Texas, whatever it is, I think we're starting to find maybe a small bottom. There were predictions this year of an increase of 1.6% I saw in values, and nothing fabulous, but that's better than going down. And they're still talking about a good amount of homes to be sold. So inventories are up. There's more houses for sale. If you've been sitting on the fence, get off the fence.
Yeah.
Now is the time to buy. You know, that saying all last year was going, right? Date the rate, marry the house, right? So we're still kind of there. Date the rate, marry the house. But your rate that you're dating is much better now than it was a year ago.
Well, I also think values are going to go up once we crest that hill and we start going. I think values are going to go up. And another reason I say that is because my son's a senior in high school, college applications, and you start noticing how many people are applying to the schools in the South. They're at an all-time high. They're coming from the north to the south. So those people that are coming, are they going to stay, are they going to go to University of Florida and then move back to Massachusetts or Chicago or wherever they're coming from? Or are they going to stay here? I have a feeling.
Leave the beach. Nobody would leave the beach.
I think we're staying. So that's going to be another driving factor that nobody's really talking about. That's just an observation I've made here in last little bit.
Yeah.
I think that's going to play a role once this thing starts going downhill. There's going to be more people coming into these.
And then there's
states.
opportunity in that too, because we have programs that if you're a student and you're going to be in college, parents can actually help you purchase a home and have it.
Yeah.
To be used right while you're in college. And so there's opportunity for investment properties. There's opportunities there. And those are some of the things that we can guide you through. So parents, if you've got kids getting ready to go to college and you don't want to just pay a dorm or pay for an apartment, there may be some things we can do. Give us a call. Let's explain to you some of these programs that we have available to us.
Absolutely.
So those are some of the good things. It's like I said, this market has been absolutely insane for 365 days. Where January is still looking pretty decent. Usually January slows down a bit, but I haven't seen much of a slowdown.
No.
And I think it's not going to. I think it's just going to continue. I think we are on a bit of an upswing finally. I think the rates are getting low enough to where people can get off the fence and they can purchase. Home affordability, while it's not where we want it, is certainly better than it was a year ago.
Correct.
And so you'll qualify for more home. You'll be able to afford that payment a little better. I've been noticing debt ratios have been down a little bit. I haven't had to put people in crazy debt ratios in order just to get them into a home, especially first-time home buyers. There are still, for Florida purposes, there's still bond programs. There's still money available in those things. Hometown Heroes and the different types of bond programs and the SHIP grant programs, Lake County and Sumter and all the different programs that are out there. There's money available for down payment assistance. There is the government lending. There is all kinds of possibilities if you're a first-time home buyer. So make sure that you're taking the time to explore your opportunities. Talk to us. Let us walk you through the details on what you can and can't do, and make sure that you are in something that you're comfortable with. Don't think it's time for an adjustable rate loan yet. It's still time for fixed rate loans. So don't worry about adjustables. I've had some people ask me, well, can I do the old style 3-year fixed or 5-year fixed? And basically what that just means is it's a fixed rate loan for 3 years or 5 years, and then it turns to an adjustable. When your rates are where they're at, there's no sense in doing any kind of an adjustable loan and put yourself in a bad position. You just take the fixed rate and that's what you run with. So, that's some of the stuff that I've been seeing personally with the clients that I've been talking to. How about you? Has anything been standing out on type of loans or type of things that you've been seeing?
No, I think we're just into. I think we're past the have tos. Situations. I've moved jobs, so I have to buy a house. We've separated in a relationship, so we have to move a house. Those kind of things. I think we've passed that. We're into more people are just interested in purchasing. So that's, a positive. We're going forward. The first time home buyers, I think this is one time that you really need to consider local. You need to be able to talk to somebody that can help you with your market, whether it be the agent, your lender. The more local you can get, the people
understand
what you're dealing with for the first time is going to be very, very key to understanding what you can get, what you can't get, what your expectations need to be. Not just simply dealing with an AI situation.
Yeah, somebody that's out there in a lending tree or whatever
Correct.
it is. Yeah, no, I agree. I totally agree with you on that. And that's one of the things that Mortgage Financial has always tried to do is build a business based on relationship, and knowing that you're not just a number. Right, you're a human being that is looking to make an opportunity to create wealth for you and your family. and then still take the biggest leap of the biggest expense in your life. And you've got to know what you're doing. So education is key. That's what we focus on with you, especially if you're a first-time home buyer with Mortgage Financial. We're going to focus on the education part of it so that you understand everything you're getting involved in. So you understand all the nuances that are involved in your file, in your loan particularly, so that you can make your educated decisions on your options.
Yes.
Yeah, and that's some of the stuff that we definitely want to look at. So that's actually really good stuff, Rich, especially with first-time home buyers. So please, first-time home buyers, if you've been sitting there and you have not gotten off the fence, get off the fence. It's time. It's time to buy. Yes, there's a lot of new construction. Yes, there's a lot of things that are happening. Yes, the builders are offering major incentives. Keep in mind, there always comes with a cost with everything, because if it looks like a duck and walks like a duck, it's probably a duck.
Well, here's the thing. There's always a cost. So, yes, you can get into the house, and it helps you get into the house in those situations. But how are you going to exit the house? Because you just more than likely added $10,000 to $15,000 to $20,000 to the backside of the price. Is it disclosed that way? No. But is it in there? Yes.
Absolutely.
So how can you exit that property in, say, 2, 3, 4, 5 years? It's going to be very hard unless the market takes off really, really high. Yeah. So you have to think a little bit more past today and, go into there. And that's where your real estate agent really comes into play. The other part that's going to come into play is, I'm sure, and just like you alluded to earlier, servicers are starting to make those phone calls for refinances. Mm-hmm. Like, those are coming. Hate to say it this way, but it's the truth. Like, try to stay local.
Yeah.
Try to stay local. Not only are you're going to be a person in the situation, are they going to have your best interest, or are they, it's not going to be somebody just trying to roll a volume through. So that's going to be key. And then the second part of that is you're going to have your best interest. Yeah. Like the overall, you're going to have a relationship. You have an understanding and education of what the process is. Might not be the best time right now. I will tell you right away, hey, today's not the best time for you to do it. It may be down the road, or it may be depending on what your situation is. Yeah. So keep local. And
Mortgage Financial Group, especially if you're one of our clients, existing clients, we keep a file, y'all, and we're watching these rates for you, and we will contact you if it's time to do a refinance based on what we know about you, right? If you're not happen to be a client of ours yet, we'd love to have you and love to talk to you and try to help you through those situations. So going with the servicer, yeah, that's great. Not always. So get a second opinion. Let a professional here talk to you a little bit so that you can get the best information that's going to be available to you. And that's really an important thing. So, hey, I'm going to say that this has been an interesting podcast. We've had a lot of information here about rates. We know what's going on with them. We know that they're kind of flatlined. And we're not anticipating, guys. Rich said in the beginning, 4% is never coming back. We may see something in the 5s, but they're not predicting that for a couple of years, probably at best. And so now's the time to try to set some financial goals, to try to set some financial position. And let us, like I said, let us help you do that. Let us give you the options and the opportunity to show you what you can do with your finances and put you in a better position. Again, if it's you're refinancing because you're in big debt, or you're just refinancing to try to get out of that 7.5% interest rate that you got stuck in 2.5 years ago, or whatever that is, let us try to see what we can do to help you do that. So I want to thank you for tuning in to the podcast today. Rich, I want to thank you for your time.
Thank you.
And just remember, Mortgage Financial Group, we are here to help you. You can reach us at 352-742-7900. As for Rich, he'll be glad to take the time to work with you. Thanks again for watching. We enjoyed having you, and we'll see you on the other side.